Good afternoon. In this video, we're going to go over this past week's trades and then weekly recap. Before I get into the recap, if you're not in the room, you can find a link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Okay, gonna get right into it. I might have to talk a little quietly. My son's sleeping, so traded his room on the 29th. SPY calls over 510. Where is the 29th? Right here. As you can see, the 29th is right here on the hourly. Kind of got an inverted head and shoulders right here, so I'm thinking maybe we push up a little more, but we did for a little bit. Actually, what did I say? 510, which is I'm getting ahead of myself right here. This high right here. So I took calls at I took puts at 9:43. I'm not quite sure what happened here. I took 5,100 puts at 9:43 at $8. I don't know why. How I managed to take a loss on this. First play of the day in the week, I took a loss on. I think I did the same thing last week too. I think for a while there was a point where I was taking a loss on the first trade of the day of the week. Sometimes even the first trade of the day a while back, but I can't really remember. It was a while ago. The mornings have been really tricky sometimes, so you're just going to adjust to it. But I don't know what I did here. I think I waited to grab it at 509. I don't know why I did that. If anything, I should have grabbed it underneath 509.50 or underneath the low of this candle, but for some reason I didn't. I waited. Usually when I play an ORB play, I will grab puts at lower day off the 10-minute candle. So the first 10-minute candle will be the opening range, and if it breaks below it, I'll take puts, and if it breaks above it, I'll take calls. But for some reason I waited down here, and that was a dumb thing I did. I don't know why I did that, but I did. I think that maybe what I was possibly thinking was that it breaks this 509 area, which is from right over here, that we actually might get some selling pressure, but it just didn't happen. It ended up being a fake out, and I took a loss there. So, but then I waited. I took puts at 1048, which is right here. Got a push up, didn't quite get a higher day, but it got over VWAP and it got shut down. So I took puts underneath. I think I grabbed it underneath this 509.50 area, because you get the body of these candles right here. So I got puts right there, and they went from the 51.10 puts went from $8 to $9.80. So I think I dumped it right in here, or right in here possibly. Then I took calls at 1207, which is right here. I get why I took it here. It didn't break lower day. Well, maybe it did just by a sliver. Then it came back up, and you get all the bodies of these candles in your VWAP. So I want to get above the 509.75 area. I grabbed calls. I grabbed the 51.15 calls at 660, and they pushed to $88.40. So I got a nice little push through VWAP right there. So at this point, I'm thinking, okay, we're going to have a range day because we didn't break out. We didn't really break down and got bought. So we're going to stay within a range. So that's what ended up happening so far. But I'm not a fan of buying puts at higher day. I'm not a fan of buying calls at lower day, because they can easily rage it or flush it. And this is exactly why. Because at this point, we think it's gonna stay in the range. Right here, if you bought calls, yeah, you may have gotten lucky, got right here, then you got flushed out. So this is exactly what I'm talking about. It's exactly what I fear when I'm playing range, is that it toys with the range, and out of nowhere it just flushes right through it. So but I did grab the 51.10 puts at 3 o'clock, which is right here, with this massive red candle, looking for an FU setup. It goes up to VWAP into 20 EMA and rejects. And when it gets below the 509 area, I grab the puts, because this is a pretty significant red candle right here, and it got bought up, then it got flushed. So as soon as it broke lower day, or not lower day, but this 509 area where it's been getting saved 1, 2, 3 times, the more likely it touches something, the more likely it's gonna end up breaking. So being the fourth touch, I was ready for puts, so I jumped in it. 51.10 puts at 650, and they went from 650 to $22. So that ended up being a 200% move off that. So just remember that the more it tests an area, the higher likelihood it's going to break. So then trade areas room on the 30th, SPY puts on the 507. I had to round down because this was the low right here. 507 was the next low area. I think the 507 was, yeah, the lower day was 507.26. I just rounded down to the nearest whole dollar. First 2-minute candle. Green. I was not really looking for puts, for calls, so I just waited and waited and waited. But I finally did take puts at 10:30, which is right here. Yeah, I took puts right here, right when it broke lower day. I could have taken it right here, but I think news came out. No, news came out at 10 or something. Or maybe it didn't, I don't know. But no, I waited to break lower day, which is right here, the 508.20 area. So when it broke, that's where I took the 50.95 puts. It went against me a little bit, but it didn't break out, and then it finally flushed. So they went from $8 to $19.70 if you held. Sometimes you just get to see how things play out, especially after a let's see, after this flush, and it got really quickly bought back up. This is crazy, but this is good stuff right here, though. This is how you make good money, is when you get these massive moves. But I really hate having opening days like this at the open right here. I hate this, but yeah, I took puts here. Then and they went from $8 to $19 right here. Then I took puts again at 12.33, which is right here. Started to make a curved little bounce right here, looking like it was getting ready to possibly bounce. It didn't quite get to the 20 EMA. Rejected the 507 area, and then it flushed right there. So right when it broke the lower day, I took the 50-70 puts at $7, and then went from $7 to $13.20. So that ended up being a good play. Then I took puts again at 249, which is right here. I tried to bounce, got to the 20 EMA, rejected it, and when it broke below these bodies of these candles of the 505, yeah, what did I get? Yeah, maybe I got it at 505. Yeah, I think, yeah, I did. So when it got below 505, I grabbed the 65 puts at 450, and they went from 450 to 890 on that dump right there. So that ended up being a pretty good play. So not going to complain there. Then we had FOMC on Wednesday, which was really, really, really crazy. May 1st was FOMC. Yeah, I said in trade ideas room, SPY puts it at 500. 500 is the low right here. I'm not taking any plays until FOMC. SPX is going to be expensive because Powell's speaking, and usually they're really, really expensive. And to me, I just prefer just to sit out, wait for FOMC. I do that for many reasons. One being the options are expensive, and two, that it doesn't usually do too much, and if you take any unnecessary losses, you may just be discouraged to not play FOMC, and that's going to be where the real money is. So it's better just to, in my opinion, just to stay out, take the morning off, go do something, go and sleep in or whatever, and just wake up at 1 o'clock and just get in the groove and get ready to trade, and busy 2 hours, and that's how you really, really make money with FOMC. You just wait for it. So with the FOMC, I took the 40.90 puts at 660, and I took the 50-60 calls at 690. This is right here, popped. So usually when we have FOMC, the first move is usually the wrong one, so it will pop hard, then it will end up dropping, then it will move again for Powell, then it will move again after Powell. But this was kind of a unique one because it popped, and then it just kept going into Powell. Then once Powell stopped talking, it dumped. So it was kind of crazy because usually we'll pop, then we'll drop. Powell will speak, we'll pop, then we'll drop again at the end of the day. So we'll initially have 3 to 4 moves, but we only actually had 2 moves straight up and then straight down. So it was kind of crazy. So when it popped up, I took the calls. And they went from 690 to 1070, and when it popped up and came back down, I dumped my puts at $5. So I bought my puts at 660 and I dumped them at $5. So I took a very, very small loss, and I'm glad I did that, because I did that with the instinct that if it's at a good price, I'll get it right now. I'll dump it now, and for some reason, if it does dump below lower day, I'll re-get it. I'll redo it. And I'm glad I did dump it because I was not expecting this. If anything, I was expecting it to pop up, then finally actually drop, because I didn't think anything was going to happen. I thought with inflation rising, I obviously knew there was not going to be no rate cuts, and there was going to be no rate hikes. There was going to be nothing changed, but the outlook, the wording of the statement was going to be important, the guidance. And so I thought pop on nothing happening, then they're going to have bad guidance and we were just going to slap down right afterwards. But we didn't. So, but I'm glad I did. I made a good decision on that. But I never anticipated seeing this. I mean, I probably should have bought calls over high day, but I was not expecting this whatsoever. So I didn't play this, but I did catch the downside. I did catch the perfect FU setup. You get this massive red candle right here, a green FU candle, and when it broke 502.50, I grabbed puts. I grabbed the 50/70 puts at $6, and what at 321. No, I got it at 321. No, I didn't get the FU setup. Oh, I got it right here. Yeah, that's right. I didn't get the FU setup, but this was a perfect FU setup. I should have played it. I don't know if I played it in my. No, I didn't play it in my challenge account. No, I didn't. No, I should have played this. I don't know why I didn't. I think I might have just called it a day, but yeah. No, what I did was 321. So I did play up here. This is what I did. I took it underneath 507. So I want to say I took it underneath the 506, 50-ish or 40-ish area. I think I took it right here, or 506.25. I think is where I took it. I took the 50/70 puts at $6, and then went from 6 to 890. Okay, that makes sense because I thought I grabbed the FU setup because I looked at the thing and I think it's went from 6 to 890. This is no 6 to 890. This is more like 6 to probably 20. But no, it's this up here I caught. And I wasn't expecting this, but I could have caught the FU candle, but I didn't. I don't know why I didn't. That was kind of stupid. But anyways, like I always say, it's always easy to look at things after the fact to see how easy the moves are. But when you're using real time, it's hard to anticipate what's going to happen, especially when you have massive red candle like that. So FOMC day, green, good day. I'm not going to complain about that. I didn't take that many trades, just 2 FOMC at the end of the day play. Then on the second, SPY puts into 502.50, which is down here. I rounded down. First 10-minute candle's red. Second, I didn't take that. I didn't, but I did take this right here. Got a nice FU setup right here. I got the deep red candles, green FU setup, and boom, when I broke below this lower day of 501.65, that's where I grabbed puts. I grabbed the 510 puts at $7, and they went from $7 to $16.50, so it ended up being a monster play. Then I took calls at 1058, which is right here. No, 1058, right here. I got this monster green candles, got over VWAP, broke down a little bit, made a higher low, and it came back up to VWAP. When it broke above this 502 area, that's when I grabbed calls. I grabbed the 50 calls at 760, and they went from 760 to 1050 right there. So it ended up being a good play. And then I took puts at 1128, which is right here, right when it broke below 502. I grabbed the 50-20 puts at 690, and they went from 690 to 980 right there. So that ended up being a good play. And then I took puts again at 1215, which is right here when it broke below 502 again. So it popped up, bounced off the 200 EMA right there, rejected, came back down through VWAP, broke below 502 again. And that's when I grabbed the 520 puts again at 650, and they went from 650 to 780 right there. So that ended up being a good play. This 502 was the area where it was the pivot for the day. It was acting as resistance and acting as support right here. So it would rip through it, then it'd flush below it and get bought, flush below and get bought. So it actually ended up working out really well. So that we had a really good day on Thursday. Then Friday. I didn't call a trade ideas room. I mean, trade ideas play because it had this massive pop up, and I didn't really want to call it right here at 510, and then I didn't want to call it down here at 507. That's $3. So there's really nowhere to call it. I just waited. I didn't want. I wasn't looking at calls after this massive run up. So I think the run up was on bad numbers too. Let's see. Unemployment change increased. Did nothing good about that news, but yet it popped on good news. It's just the market. And I was not taking calls. First 10-minute candle was red, didn't make new lower day. In fact, it kind of flagged up. It broke out. Then when it got to the 502.50-ish area, 30, which is right here on the hourly, had a lot of heavy resistance above 512. You can see it right over here on the hourly. It got shut down hard, so when it broke lower day, I jumped into puts. I grabbed the 50-90 puts at 650, and they went from 650 to 840 right there. So that ended up being a really, really good play. Then I took puts again at 10:01. No, 9:35. Okay, wait a minute here. I didn't even wait. I did take the first play, but didn't even wait the first 10-minute candle. Okay. I got to look at the timestamps better. Okay. So what did I do here? I think I got it underneath 510. Yeah, I think I did. Or maybe I've got it underneath the 510. I think I got it under 510.50 to be honest. Well, I either got it underneath 510.50 or 510. And it was the 50-90 puts at 650, then went to 840. So yeah, this was the first play. Didn't wait out the first 10-minute candle. And I think the reason why I didn't wait out is because when we have these monster candles up, we usually end up giving it back right away, which we did a little bit, then it popped. And then this is the second play. The second play was right here, where it broke new lower day. This is the one I got for 50-95 puts at 630, and then from 630 to 950 right there. So yeah, the first play was here. Didn't touch calls. Then I grabbed it when it broke lower day right here. So the second puts play. And the third puts play, the final puts play was at 1054, which is right here. And you can see it got bought back up, tried to get the VWAP, it broke, it failed to break over VWAP. You got the body. You got massive wicks right here. So I was like, okay, it gets below this 509.50 area. I'm grabbing puts. I'm grabbing the 5100 puts at $9, and they went from $9 to $11.70. I know it was more expensive. I think the reason why it was more expensive because I anticipated 5100 puts being maybe a little cheaper than what they were when it broke, and I didn't have time to switch, so I was forced to buy it at $9. So sometimes when you have it loaded, and they end up getting a little pricier than you want it to be, and if you take the time and you change it, you may miss the move. And I've had that happen so many times where I go to change it to get a cheaper one and I miss the move. So sometimes it's just better just to suck it up and pay the price that you're not comfortable playing, just so you don't miss the move. So I probably would have missed the move, but I kept the 5100 puts, played it 9 to 1170. So I'm not going to complain about that. So that ended up being a really, really good play. So with that said, the 15 wins and 1 losses for a win rate of 93 0.75% for the week. Definitely a great week. Only one loss, and it was the first play of the day on Monday, first play of the week. So hopefully I won't do that tomorrow or this week coming up. And very good week, and I hope this has helped you understand why I did what I did. You just gotta adapt to the market conditions because they're always evolving. It's always changing. They're always tricking and trapping and giving you looks, and they'll give you a look. It will do something, then it will end up doing something else. Then they'll give you a bullish pattern. Then they'll flush it. It'll look at a bearish pattern. They'll pop it, and sometimes the patterns actually play out. You just gotta recognize all these things because it's always changing, always evolving. You gotta remember that we're just small little fish playing with sharks, and what's happening is that we're playing against people that are billionaires that have more money than they know what to do with, and than we'll ever have. And they have high frequency trading and algos, and we're outnumbered. We're playing against the house, and the house is stacked against us. So you just gotta understand how the house works and what they're looking at and how they do things, and then this things got a little more easier to deal with. So so with that said, that's gonna do it for the recap, and thanks for watching.